Most homeowners who want to move up feel stuck. They can't buy until they sell, but they don't want to sell until they know where they're going. Is there a way out of that trap?
Yes, there's a lot of ways to go non-contingent on the sale of a home. Most people just don't know they exist. The sell first or buy first dilemma is one of the most common problems I solve. And the answer is almost never, you just have to wait and hope.
Why does this problem come up so much, especially in a market like this one?
It comes up in a market like this one because spring is peak move-up season. So people who bought their first or second home a few years ago have built equity, their family situation has changed, and they're ready for the next step. But the trap is real. You see, if you sell first, you're homeless while you search. And in a fast market, that can mean months of uncertainty. If you buy first, you're carrying two mortgages until the old home sells, which can terrify many people. The problem isn't the market. The problem is that most buyers only know about the conventional path. List, sell, then buy. And there are at least 3 other strategies to solve this sequencing problem entirely. Most people are never told about them.
What's the biggest misconception about buying before you sell?
The biggest misconception about buying before you sell is that you can't do it without being rich or taking on enormous risk. The assumption most people make is, to buy before I sell, I need to qualify for 2 mortgages at once. And since most people can't do that, they assume the door is closed. That assumption is wrong for 2 reasons. First, there are loan programs specifically designed for this scenario that don't require you to carry 2 full payments. Second, even for buyers who do need to qualify for both temporarily, there are strategies to manage the debt-to-income impact. So you see, the buy before you sell problem is a financing and sequencing problem, and those are exactly the kinds of problems that have solutions. You just need someone who knows what they are.
What are the actual strategies available? Walk us through the options.
So there are 3 main approaches that you can take. The first one can be a bridge loan. That's a short-term loan secured against the equity in your current home. You use it to fund the down payment on the new home, and when your current home sells, typically within 1 to 4 months, you pay the bridge loan off. You own both for a period, but the bridge covers the down payment so you're not cash strapped. Second can be contingent offers with structure. In some markets and for some sellers, you can make a competitive offer that includes a sale contingency, but structure it in a way that protects the seller and makes it attractive. This requires a skilled agent and a lender who can credibly backstop the financing. And then third is using a home equity directly. If you have significant equity, a HELOC or cash out refinance on your current home can provide the funds for a down payment on the new one before you sell. You do carry a higher debt load temporarily, but the math often works. Which one is right depends entirely on your equity position, income, credit, and timeline, but there's almost always a path.
Can you give me a real example of someone who was stuck in this situation and found a way through?
I'll give you a case from last year. A couple, 2 younger adults, they'd outgrown their first home, been looking for a year and a half. Every time they found a house they loved, they couldn't move on it because they hadn't sold yet. And every time they listed their house, they got nervous about where they'd go if it sold quickly. Classic paralysis. Neither direction felt safe. In their case, we used a bridge loan. They had about $180,000 in equity on their current home. We structured a bridge loan that gave them access to $120,000 of that equity, enough for a strong down payment on the new purchase. They made the offer on the new home, clean offer, no contingency, 21-day close. Offer accepted. They moved into that new home first, then listed and sold their old one 34 days later. The bridge loan was paid off at the old home's closing, and the net cost, a few $1,000s in bridge interest. The net result, they bought the home they wanted, sold from a position of strength, and never spent a night in temporary housing.
What do most people miss when they're evaluating these options?
The biggest thing people miss when they're evaluating for these options is the cost of waiting. Most people who feel stuck in the buy-sell sequencing problem just wait. They wait for clarity, they wait for the right moment, they wait to feel ready. And while they're waiting, the market moves. The homes they want get purchased by buyers who had a plan. Their own equity might be growing, but so are the prices on the homes they're trying to move into. Sometimes they end up in the same relative position a year later, but older, more frustrated, and having watched several opportunities past. The cost of waiting isn't just emotional, it's financial, and it's real. Any move-up buyer who is seriously thinking about this conversation should sit down and calculate, what does waiting a year actually cost me? The answer is usually more than the cost of the financing strategy that would have solved it.
What's the biggest mistake you see move-up buyers make?
The biggest mistake move-up buyers make is trying to time both transactions perfectly. I know people want it. They want to close on the sale and the purchase on the exact same day, and I understand why. It feels clean, it feels safe, no double payments, no bridge, no risk. But in practice, perfectly synchronized transactions rarely happen. Something always moves. The buyer on your sale asks for an extension, the seller on your purchase gets another offer. The stars rarely align on their own. So the buyers who move successfully are the ones who accept a little overlap, a few weeks of carrying both, and a plan for it financially. That brief overlap costs far less than missing the home you actually wanted.
For someone who is a homeowner who wants to move up, what do they do right now to understand their options?
There's 3 things I would tell the move-up buyer to do now. First, get a current estimate of your home's value and your mortgage payoff. The gap between those 2 numbers is your equity, and equity is the raw material for almost every buy before you sell strategy. Second, pull your most recent mortgage statement and your income documents. Your existing payment and your income determine what you can carry temporarily. And then third, call me before you list or before you make any offer. This conversation takes 20 minutes and will tell you exactly which strategies are available to you and what the numbers look like.
And if they want to explore this with you directly?
Well, you can take the home loan quiz on my website. There's a path specifically for current homeowners who want to move up, and I'll send you a personal response. Or reach out directly. Move up financing is one of my favorite conversations because there are almost always more options than people think.